free to, as you please.
Okay. Well, good afternoon to all of you who have joined us in this panel session. Thanks for joining, and many thanks for the e-MFP and the European Microfinance Week for organizing this this panel discussion, which I hope will be very interesting to all of you. So, as you know, the topic of discussion of the day is building MFI resilience for climate change. And the objective of the discussion would be to envisage some potential solutions in order to make MFIs more resilient to the climate change. Please note that the focus of the day is really on MFIs resilience. There was a panel discussion previously on the micro entrepreneurs and the people's resilience. So today, at this stage, we try to focus on the MFIs, which are obviously very much related to their end clients, of course. And the panel we're trying to dedicate it to the investors in the microfinance sector. Just to set the scene, we have more or less 45 minutes, maybe a little bit more. We have 4 panelists today that will each of them provide you a short presentation of 5 minutes. And then we will open the floor to questions. So if you have any question, if you want to raise any comment, any suggestion, please do so by writing in the chat box, and I will select the questions and address them to our panelists of the day. I'll try to do my best to select as many questions as possible, but I will have to possibly make some choices. So apologize if your question is not raised at the end. If there are very specific and precise questions, then the panelist might answer in writing directly to you. Before starting, I would like to introduce our panelists of the day. So we have, first we have Cristina Dumitrescu, who's been active in the financial sector for more than 25 years. She entered in the microfinance sector by working for the European Fund for Southeast Europe. And since 2013, she has joined the inclusive finance team at the European Investment Fund, where she's implementing EU programs related to microfinance and social entrepreneurship in the EU. We also have, so hello, Christina. We also have Esther Bauer from Swiss Re. Esther is the head of the Public Sector Solution Europe, and she's covering clients based in Europe and the Maghreb. And she used to cover as well Africa in the past. And her clients include sovereign, sub-sovereign governments, international organizations, and development finance institutions with a strong focus on developing new solutions for climate and natural disaster-related risks, and more recently, health-related risks. Hello, Esther, and welcome. We also have Jean-Marc de Bricon with us today. He's the general manager of Alterfin. Alterfin is a Belgian-based financial cooperative that's been financing microfinance institutions and agricultural producers for no more than 25 years. Alterfin is active in Africa, Asia, Latin America, and has just under 200 investees. And half of them are microfinance institutions. So welcome, Jean-Marc. And then we have Basit. Basit Arshad has been associated with impact investments for more than 10 years. He's working for Blue Orchard. He's been actively managing investments in Asia and Africa. So today he's working for Blue Orchard Finance as a vice president, and he's taking care of transactions for the Insure Resilience Investment Fund. He will talk a little bit about this in a few minutes. And the fund is dedicated to promoting climate insurance for the poor and vulnerable people in emerging economies. Finally, myself, so my name is Olivier Edelman. I'm in charge of the investments in microfinance institutions for the European Investment Bank. We are active mostly in Africa, the MENA region, and the Caribbean, where we provide debt and equity solutions to support access to finance for micro entrepreneurs. So that's for the presentation of our panelists. So welcome to all of them. Before giving the floor to each of them, I would like to give you a few key elements to set the scene for our panel discussion today. First, I would like to remind you that the Earth's mean temperatures have already risen by approximately 1 degree since the pre-industrial levels, which has caused more extreme weather events as well as gradual shifts in temperatures and rainfall patterns. Unfortunately, the current trajectory of warming raises the risk of abrupt and possibly catastrophic changes over the next decade. Obviously, we all know that developing economies are likely to be hardest hit because of their geographic exposure or the quality of their infrastructure and economic structures. And this will have a major impact, as we all know. Therefore, we need to take some actions, and in that sense, the Paris Agreement represents a global response on climate change. And it clarifies that the global average temperature rises must be maintained well below 2 degrees, and we should pursue efforts to keep it below 1.5 degrees. In that sense, the next decade will be extremely important. For macrofinance institutions, the global warming and its impact might come from several direct and indirect sources, but notably from loan payment defaults. Indeed, many MFIs clients will be severely suffering from the climate change and might end up frequently in situations of financial unrest. And these events will be occurring irregularly, but more frequently than in the past, and will generate very important systemic losses for MFIs. The EIB, as you probably know, has taken very important decisions vis-à-vis climate actions and environmental sustainability. So as you may have seen, the EIB has decided to gradually increase the share of its annual financing dedicated to climate actions and environmental sustainability to 50% by 2025 and beyond. In addition, the IB Group will align all its financing activities with the principle and goals of the Paris Agreement by the end of this year, meaning our investments should not harm the climate agenda. And I would like, before handing over to our dear panelists, I'd like to also stress some of the actions that we will take on a macrofinance angle and vis-à-vis the MFIs. Indeed, EIB wants to ensure that the transition will be just for all and will not leave anyone behind. And that will translate in seeking to invest in projects that will also support the transition and improve social development and gender equality in line with the Paris Agreement and the European Green Deal. This will entail focusing on building resilience for the most vulnerable people who are at risk of facing the impacts of climate change. That is very important to us. We want to ensure that our operations will support the resilience of MFIs against climate change and hence will support indirectly vulnerable groups such as women or refugees. So today, our panel will be very crucial because we would like to take out from our discussion some potential ideas for future operations for EIB, but for the other macrofinance investors that would support MFIs to get more resilient against the impact of the climate change. To start the brainstorming, I would like to hand over now the floor to Jean-Marc, who will give us some interesting ideas on the topic. Jean-Marc, the floor is yours.
Thank you, Olivier. Can you hear me?
Yes.
Super. Well, first of all, I think we should remind ourselves that although COVID is a global risk for all microfinance institutions and their clients, climate change remains the greatest threat in the medium to long term. And microfinance institutions and their clients, and specifically smallholder farmers, remain the most exposed to the direct and indirect consequences of climate change. So what are our partner microfinance institutions doing about this? Well, some have launched some programs to bring awareness to their clients. That's the case, for instance, of our partner FDL in Nicaragua. They've been working for years now with the NGO Nitlapan to make coffee smallholder farmers more aware of climate change and what they can do about it. Some have adapted their portfolio and implemented more geographical diversification in order to reduce their exposure to some regions that were more impacted by climate change. That's been the case, for instance, with our partner e-MFP in Burkina Faso and in Ivory Coast. Some have adapted their products. That's the case of our partner Atadamoun in Morocco, and also Vision Fund in Myanmar, and Proximity also in Myanmar. They have adjusted their loan cycles so that they would match better the seasonal cycles of their farmer clients. And some have finally promoted diversification of crop cultures. That was the case, for instance, with our partner Advance in Ivory Coast, where they've been working with smallholder farmers in cocoa and cashew nuts. Now, all these initiatives, all these programs have been implemented by microfinance institutions in order to build up their own resilience or build up the resilience of their clients, which also indirectly helps them. At our level, as a lender, what has Altafin been doing? Well, first, back to basics. What we should be doing as a lender, and what I'm hoping we're doing, is to bring adequate and appropriate funding. Okay, so we really need to be aware of what the need is. What kind of funding our microfinance partners need. And what we've been doing in the last 5 to 6 years was to drastically change the way we provide funding by doing it systematically or as much as possible in local currency. So after 5 years now, if you look at our microfinance portfolio and you account for dollarized economies, you will find that local currency funding accounts for more than 2/3 of our activity. So why am I mentioning this? Well, because it's absolutely essential that as a lender, we do not expose microfinance institutions to unnecessary risk. And hard currency exposure is one unnecessary risk. Because by exposing the microfinance institutions to that risk, we make it more difficult for them to address resilience to other risks and threats. So we, as a lender, we have an obligation to do the right thing. There are, of course, other things we have been doing, such as providing technical assistance with dedicated programs of funding and addressing all sorts of issues, going from the improvement of governance to human resources issues, risk management issues, internal audit, accounting issues, price risk management issues, or even for producers' organizations, the certifications of agricultural produce to fair trade standards. All of these, although they do not directly tackle the issue of climate change, resilience, they help microfinance organizations and agricultural producers organizations in being better organizations, being stronger. And that's the definition of resilience. Resilience is your capacity to adapt and to face a shock. But is this enough? Can we do more? And the straight answer is no, this is not enough. We should be doing much more than that. The technical assistance needs in order to address climate change resilience are huge. And frankly, they go beyond the capabilities of one Altafin or even of the whole private sector. So really, I think when we're looking here, given the magnitude of the threat, we are looking at something where government and quasi-government organizations such as DFIs and supranationals need to be more involved. And frankly speaking, I think what we need is some sort of a Marshall Plan that will address the issue in the way it should be addressed. I think that's it for me. I respected my time. So I'll hand over back to you, Olivier.
Thank you, Jean-Marc. Thank you. Yes, the time is perfect. So I took note of appropriate lending, which means also lending in local currency, technical assistance, capacity building are the main, the main takeout from what you just said. Thank you, Jean-Marc. Now we will hand over the floor to Christina from the European Investment Fund. Christina will talk about the product that the EF is providing mostly in the EU and accession countries. Please, Christina, give us some ideas of what you can propose to potentially solve the issue of climate risks.
Thank you very much, Olivier, and thank you very much to European Microfinance Week for inviting me to this panel. As some of you know, European Investment Fund is implementing the easy financial instruments on behalf of European Commission. EASY stands for Employment and Social Innovation, a program launched by DG Employment back in 2015, in almost on its final days as we are approaching the end of the current programming period. Easy financial instruments aim at increasing the availability of and access to finance for vulnerable groups that wish to launch their own enterprise, be it a micro or a social enterprise, both in their startup and development phases. As was mentioned before by Olivier and Jean-Marc, the vulnerable groups are the most impacted ones by every or almost every risk that appears on the market, including climate change. For a vulnerable group to be appealing for an MFI to lend to, the MFI needs to be resilient, to be protected against the credit risk that such a loan operation entails, and to be able to have strengthen strong institutional capabilities to be able to further grow the respective business. So the easy instruments are 3 in number. We start with easy guarantee instrument that improves the credit risk of the portfolios built up by the MFIs. It provides a first loss portfolio guarantee with a guarantee rate of 80% on a loan-by-loan basis, capped at the expected loss estimated at the portfolio level. Typically, this expected loss is around 10 to 15% in average. In terms of impact, as of today, EIF has signed 142 guarantee agreements, supporting the mobilization of more than 4 billion euros for micro and social entrepreneurs in Europe and accession countries. Based on the most recent reporting, we have reached almost 90% final recipients, final beneficiaries, out of which 12% are involved in agro-related businesses, which are the most impacted by the climate change. And we should mention that these agro producers are generally small and very small, majority of them weather dependent, especially in Eastern Europe, where there is not such a high culture for insurance related products to insure their crops. Going to the second financial instrument, the easy capacity building, this allows for subordinated loan agreements aimed at strengthening the capital base of the MFI, allowing as such for further growth, while the MFI is using this money for various CapEx investments. We have signed a couple of transactions in Europe, and the majority of these went into various digital or IT system enhancements. For example, we have a microfinance institution in Romania, Patria Credit, that acquired a GPS-enabled platform that allows for satellite monitoring of the farming businesses. And the MFI gave free access to its clients to this platform. So a combination between financial and non-financial products may support the resilience of the final beneficiaries, which in turn translates into a better risk profile of the MFI and respectively its resilience against the risk in the market. There is a third financial instrument, Easy Funded, that provides liquidity to MFIs and other microfinance providers, but that for another panel in another conference in the future. Thanks a lot for the opportunity to speak to this to the European Microfinance Week, and I'm available for any questions you may have. Thanks a lot.
Many thanks to you, Christina. So here I took note about portfolio guarantees providing first loss protection, and I took note also about technology that you mentioned. All this being providing support to vulnerable groups to become more resilient to climate change. Let me hand over the floor now to Esther from Swiss Re, who will talk about another solution which is related to insurance. Insurance as a way to provide protection and support MFIs to be resilient against climate change. Please, Esther, the floor is yours.
Thank you very much, Olivier. Banks and MFIs are unlikely to lend to small entrepreneurs and farmers in disaster-prone regions if a drought, a hurricane, or a flood event may result in widespread loan defaults. So what can MFIs do? What does better risk management or better risk profiling actually mean? Does it mean reduce the lending in disaster-prone areas to have a better portfolio, better risk, and be more resilient? I don't think this can be the strategy when we're talking about financial inclusion and access to credit in order to stimulate economic growth, especially in the current environment. So insurance can actually protect MFIs against loan defaults or restructuring costs, and it can enable farmers to access credit. Insurance can actually serve as a collateral for credit. And there's one example, it's that how it stimulated me, which I found so nice. It's in the meantime about 8 years old. We were working on an agricultural insurance product with the Syngenta Foundation's acre organization in Kenya in 2012, and the insurance product was implemented, and farmers planted their seeds. And at the very early stage of the season, there was a drought. There was not enough rain for this seed to grow, and it was very clear that there will be an insurance payout, but the insurance was structured in a way that it will pay at the end of the season when it's established that the harvest wasn't successful. But the farmers knew already at that point it wouldn't grow, and it was early enough in the season to replant. But they already had taken a credit which they couldn't serve, so they couldn't get another one to replant. So the organization approached us and said, hey, Swiss Re, it's clear there will be a payout. Can you issue a letter of a guarantee that enables the farmers to go to the bank and get a new credit? So that's what we did. And a new insurance product was born, which we called the replanting guarantee. I think it's just a nice example to see how insurance can serve as a collateral. I would also like to quote the Ministry of Finance from Uganda, which established an agricultural insurance program in 2016, and says, agricultural insurance encourages banks to lend to the agricultural sector given that the risk associated with agriculture is mitigated through appropriate insurance cover, which thus improves access to agricultural loans. So how can insurance be implemented? I would say there are 3 levels of intervention. First one, MFIs can bundle loans with insurance. And I'm not talking about this specifically because the next speaker is going to talk about it in more detail. The key challenges are clearly affordability and how to scale it. Another level of intervention is MFIs themselves can buy insurance and protect their own portfolio. Such a cover can be structured in a way that the MFI receives an insurance payout in case of, let's say, a hurricane or a drought happens in a relevant area where the MFI has a lot of exposure. The insurance would pay out if certain predefined parameters such as wind speed or amount of rainfall or lack thereof over a certain period are met. Such a payout would provide the MFI with immediate liquidity, which it can use to restructure loans, to grant interest, holidays, to provide emergency support, or just to ensure it can continue to lend despite difficult environment. The third level of intervention I'd like to mention is at national level, a more systemic level. As the example I mentioned from Uganda before, which introduced a national agricultural scheme. Such government-sponsored programs, often public-private insurance programs, they reduce the risks for MFIs and banks in that particular country and stimulate lending activities. And I think that's actually the easiest way to reach scale. And there are more and more countries that have identified agriculture as a strategic sector that they want to invest, and they see the necessity to have insurance in place to stimulate lending. Turkey is a good example that started a national scheme 15 years ago. Morocco has a national agricultural insurance in place that facilitates the access to credit. We have worked most recently with the governments of Kazakhstan to launch a drought insurance program. And it started last year, and next year it will be compulsory for farmers to take out the insurance in order to get credit. We have also worked with support from KfW in implementing an agricultural insurance scheme in Armenia with the central bank there. So requirements to have insurance in order to access, we see that in various places, also quite common in Latin America. And I think it goes back to Jean-Marc's point before. We really need to work on systemic level and with governments to create the necessary infrastructure and ecosystem for the resilience that all the players need. Thank you.
Thank you very much, Esther. That was very interesting, and indeed, you pointed out the main topic when we talk about climate risk is the level of risk is so high that it prevents lending sometimes to a large extent, and it's very interesting to hear the different level of actions that you have mentioned, at the level of the government, at the level of the institution, and at the level of the final beneficiaries. Each of them having its own, I would say, advantages and weaknesses. Indeed, very interesting, and maybe we will discuss more in the Q&A afterwards. I would like to give the floor now to Basit, because Basit will indeed dig into one of the elements you mentioned. Basit is in charge of the Blue Orchard Fund, which is basically combining a loan and an insurance. And that's an interesting topic for the panel today. So Basit, the floor is yours.
Thank you very much, Oliver. So I'll just start with the basic points, which are basically, the opportunities and challenges of an MFI when they are implementing insurance in their portfolio. So so first in the opportunity side, they are like in some emerging economies, there are some insurance companies which actually have the product in place, and the premium is pretty much affordable for the MFI to actually implement it with their loan product. And then in some areas, there are some government officials also, government also acts like very positively, and they actually promote insurance by providing education training to the farmers, and they also try to subsidize the insurance premium with the insurance company so that it is affordable for the farmer, and also promote it through MFIs. They are sort of like a public-private partnership which happens, and it's like a tri-party agreement which takes place, which actually promotes and grows the insurance product to basically the people at the bottom of the pyramid. But on the challenges side, again, we also have limited challenges because first and the foremost thing is the education to the farmers, because many of the farmers don't actually understand the product and its benefit. All they look into is the cost associated to the insurance product itself. And then again, in some economies, we have seen that the government actually doesn't play much of an active role in it, and the insurance product is actually not available in the whole country. And if any insurance company or fund or anyone else who wants to launch the product, so initially as the volume is low, the price is high, so there's not much support which is provided by the government at that time. Then we also have lack of technology, which actually is a challenge because we don't have enough weather stations and weather data available in order to identify what can be the thresholds for the insurance also. But then again, we do come across a lot of countries which are actually working on it and trying to launch and promote such product. Um, our fund basically is IAF, and this IAF fund basically was launched to promote such insurance, and also help the MFI to grow the portfolio, which is implementing the insurance product in itself. Our fund, which is IAF, it was actually launched by KfW, and it's backed by private and public investors. The fund size is $200 million, and it's bifurcated into two parts, which is the equity as well as the debt side. In the debt, we provide debt financing senior and subdebt to MFIs in order to support the portfolio and grow it to a certain extent. On the equity side, we focus on providing equity to the insurance as well as the insurance tech companies. Apart from that, we also have a technical assistance arm, and it's basically managed. We have a TA partner, which is Celsius Pro, and we provide sort of a subsidized technical assistance in order to promote the product, launch the product, as well as grow the product to a certain extent, help the MFI scale it up. There are some regions where we help in launching the product. We also provide in the element of the premium support facility, where a grant is offered to the final beneficiary in terms of subsidizing the premium pricing in the initial years when the product is launched. That actually helps in promoting the product in the initial levels, and then later on it can be scaled up. So so in this fund, one of the key success story which we have is of Kash Foundation. Kash Foundation is one of the largest MFIs in Pakistan, and they actually have 100% of their beneficiaries are actually women, and they were one of the first MFIs which launched microinsurance, and they are providing microinsurance to more than 2 million clients across the country. So in 2017, they actually launched a livestock financing product, which was linked with livestock insurance. And we actually approached them, we discussed with them, and we structured a transaction where we provided a senior loan to them. At that time, they only had 5,000 clients who were taking this loan, and it was only in 5 branches across the country. So now, as per our latest financing, we have actually provided them with the second tranche this year. And they have grown this product where the average loan size is somewhere around $400, and they have grown it to more than 50,000 beneficiaries across the country. And now we are basically going to provide them with technical assistance in order to draft educational brochures for their sales team in order to grow the product, and also for the final beneficiary in order to educate them with the product in itself. And we target that in the next 2 years, hopefully, Kashf is going to reach somewhere around 300,000 clients with the funding which we are providing through IAF. So it has been pretty successful to us. Apart from that, we have been very active in Africa as well as in the Eastern Europe side, and also in Latin. So we hopefully would be working again to promote such product in the emerging and the frontier economies.
Many thanks, Basit, for the very interesting explanation about what the fund is doing. If I may, so I think we went through the different presentations. So we have covered different types of potential support. And if I may link to what Jean-Marc said, so indeed we need a master plan to provide support to MFIs and enable them to be more resilient. This master plan will combine several tools because only one will not be enough. The combination of qualitative lending in local currency, combination with guarantees that would provide large coverage on credit portfolio, together with insurance solutions and technical assistance is basically what I heard. I would like to ask to the attendees if anyone has a question. I see interesting comments that were put on the chat. Are there any questions? I mean, until anyone puts a question, I will ask already mine, maybe to Jean-Marc. I would like to ask you, Jean-Marc, for you. I think, let me see the words that you have used. Adequate funding. What is inadequate funding according to you?
Thanks, Olivier. Well, let's put it this way: inadequate funding is in a way the worst funding you could think of. Okay, and it's something that comes in when the microfinance institution is performing well. It's sizable funding that comes in, but that is made in hard currency. So it exposes during the life of the transaction the microfinance institution to hard currency risk. And although it may be appealing because typically the rates in dollars or euros are lower than the rates in local currency, the institution may end up paying much more than what it had originally borrowed. But it's not just that, it's also the fact that those kind of lenders may not be most committed to support the microfinance institutions when the times are tough. And when the portfolio at risks goes up, for whatever reason, natural disaster, global pandemic, they start panicking, there's a breach of covenant, and they want their money back. So that's the worst kind of funding or inadequate funding that you could think of. What you need instead are lenders that are committed to support their borrowers, no matter what the conditions are. And let me refer to, well, some initiatives that were taken. In the microfinance sector, you had the pledge of the microfinance investment vehicles. You also had the pledge of the 30, which was led by the Grameen Agricole Foundation. And these committed their signatories, including Altafin, in the pledge of 30, to respect some values and some types of approach, some commitments to try everything to provide grace period extensions or restructuring, and to work together as lenders to find the best possible solutions. That's absolutely essential. And we are, by the way, we're also a signatory of the responsible lending principles issued by CSAF, the Council for Smaller Agriculture Finance. And I mentioned that because there were some very interesting comments from someone from Trias. The same is applicable to loans made to agriculture organizations.
Thank you, Jean-Marc. I see that we have received a question from Camille. So the MFI's resilience being directly linked to their borrowers, what kind of actions would you suggest towards them or towards the borrowers? So indeed, today the focus was on the MFI, but obviously this is completely interlinked with their clients, And indeed, protecting the MFI or protecting their clients comes to the same objectives, I would say. Maybe I would ask Esther if she wants to answer to that question, because you mentioned the insurance is an option, and the insurance can be granted at several levels. It can go directly to the people. It can be used for the MFI, and that's where, you know, and let's set aside maybe for the moment the government, which is providing a larger scale. But how do you see the benefit and maybe difficulties of addressing the insurance directly to the people or to go to the MFI?
Yeah, so I think the idea of a portfolio cover for an MFI has has interested us for a long time, and we've had many conversations with MFIs about the feasibility of such portfolio covers that will provide them then with immediate liquidity that they can use. While there has been interest, we have looked at various cases. We also noticed that often the portfolio information, or what we call then the exposure information, was not really sufficient. The granularity of the information of where these exposures were made it difficult to structure a tailored solution. And the other thing is, there have been many attempts to look at the correlation or the link between climate events and loan defaults. And actually, there haven't been that many so far, because largely MFIs have not lent to those areas. So the experience and the awareness isn't really there. So that has so far a bit prevented the activities. But I think it would be really interesting to think about sort of climate insurance facility for MFIs, guarantee facilities in case a climate event happens, where different MFIs could benefit from.
Yeah, it's interesting what you say, but because in a way you're saying that it's kind of a chicken and the egg problem. I mean, we don't see that much correlation because, in fact, the lending to the most at risk vis-a-vis the climate risk is not so important. Huh? Is it what you say indeed?
Yes, I think we need to look at it as not as a defensive mechanism to protect the MFIs from current risk, but actually how can we enable them to lend to those areas? I think that should be the goal, because otherwise it's already contracted, but the goal should be that more people have access to credit. And that means the MFIs need new tools to manage those risks.
Yeah. I see that there's a question from Bart. Before raising the question, which I might raise to Basit, I would like to give 2 minutes to Christina, because we touch upon the incentive side of the insurance vis-a-vis lending, for example, for farmers. I mean, no insurance, basically not so much lending, but the insurance could unlock lending potentially. EF has used portfolio guarantees also to unlock lending where it's difficult for microfinance institutions. Maybe you can say a few words about that, Christina, and then we take the question from Bart that I would ask maybe Basit to answer.
Yeah, thanks for the question. The idea is that the portfolio guarantees products of EIF that are implemented based on various programs from the European Commission are meant to increase the access to finance for the SMEs or for vulnerable groups in our specific case, in the microfinance case. And we have observed not only the increase in lending based on the easy guarantee, and we have very concrete examples. I would indicate here Adi, who launched a dedicated product loan. If I recall correctly, the name is Propulse, under the previous e-MFP Progress Microfinance Guarantee back in almost 10 years ago. And this product basically skyrocketed based on the guarantee provided by EAF. There are other examples, MicroStart, for example, the Belgium MFI, where the entire loan production is guaranteed by an EAF guarantee. So this enhanced access to finance that is provided to the final beneficiaries by reducing the corresponding credit risk for the MFI, I think it's an important feature of these products.
Yeah, thank you, Christina. Indeed, and the two products, the guarantee and the insurance, are two solutions which do not cover the same scope of risks, obviously, but they both play not only a role as a protection, but also a strong incentive to support lending, in particular in the context of climate risks, which leads to important systemic losses. So maybe, Basit, if you don't mind answering the question from Bart on the cost of the insurance, which is a very relevant question.
Sure. Yes. Yeah, this is a very valid point that if there is a climate change which takes place, which increases the premium because there is a very high probability that there would be a lot of claims on the insurance. But then again, insurance companies, they do have those weather stations in place, and they do have the data. So it's not like they make the insurance extremely expensive so that it's not affordable. It's basically a balance which they're trying to maintain. But then again, as far as as in Blue Orchard for the IIF fund, if such cases are there, so it's basically initially discussed, and that's where our grant enters also in order to support such premium high cost. And we have been pretty successful in some of the transactions where we have provided some grant money to the high premium insurance. Whereas we have also worked on different transactions where we have provided emergency lending through Vision. Like one of the transactions was with Vision Fund International, where we provided emergency loan when any such of the climate insurance event happened, which with partnership with Global Parametrics, where we had basically finalized the thresholds of what sort of climate insurance event would trigger and where we would enter to provide emergency loan to them. But in some areas, if the premium insurance is high, insurance companies actually are not that much active also. So we really have to see, and then the MFIs, they also don't actually are giving out a lot of loan, mainly, like if there's some area which is near the river belt, of if it is near the sea or any near the creek. So the MFI is also not that active because they know that there might be some event of floods or anything happening like that. So everyone is playing a very cautious approach depending on the location where they're actively operating.
Many thanks, Basit, for the explanation. I see that we have one more question. Maybe we'll take this one as a last question before I quickly wrap up, because we're already it's already 5 o'clock. Maybe this question, I mean, I could ask it to both you, Basit, or Esther. I don't know if one of you would want to take it in priority. Maybe Esther, I think you mentioned, yeah. Esther, please.
Yeah, I think the challenge is really to make it affordable, as Basit mentioned before, and sometimes there are unrealistic expectations, but I think there are two main challenges actually. Is that the insurance does what it is supposed to do, that it pays out when it is supposed to pay out, which does require a lot of structuring. And the second element is really the affordability, and that is something you can structure how much payout will be granted in case of an event, and as Basit mentioned before, sometimes there are subsidies from DFIs that help, and in many of these national schemes that I mentioned before, where governments make it a strategic priority, then there is often subsidies associated with these insurance schemes from governments to make it affordable. And on that last point, I know that this may sound a bit controversial to talk about subsidies and sustainability and so on, but we need to keep in mind that agricultural insurance in the United States is subsidized by 60% by the government. In many developed countries, there are heavy subsidies for agricultural insurance, and it is one of the also acknowledged say forms of subsidies under WTO and whatever trade schemes that there are.
Many thanks, Esther. I think now we have reached the end of the panel. I don't see. I have one question just to me. I think that I can, Bart. We can discuss it separately if you don't mind, because I think we have to close, but we can talk about it together. So many thanks for all of you for participating today to the panel. I mean, for me, I noted down key points. I mean, we need a master plan. This master plan should not only aim at covering risk, but also be used as a way to incentivize more lending to vulnerable groups of people, in particular those at risk of climate risk and its impacts. And we need a panel of solutions, not only one. We need affordable lending and insurance first. This needs to be provided in local currency and needs to be adequate to the needs of the people. And this is true for lending, but this is also certainly true for any insurance solution, I think. Technical assistance clearly will help in all matters to strengthen the capability of the microfinance institutions. And last but not least, portfolio guarantees can also be used as a protection for MFI. And these guarantees are not only a tool to protect against climate risks, but they can protect for other types of risks. So it provides, let's say, a larger scope of action, however less dedicated than the insurance solution, which could also be adapted to a larger scope in some cases. So very interesting. Many thanks to all of you who attended and raised questions. Many thanks for all of you in the panel, Esther, Christina, Jean-Marc, and Basit. And many thanks for the European Microfinance Platform to organize this discussion. So I wish all of you a very good day and goodbye. Good evening and good afternoon to all of you.
Thank you. Bye-bye.
Thank you. Bye-bye.
Thanks.